Well, for the next few minutes, we're going to be talking HMOs with Stephen Johnson, MD of Shawbrook Bank. And Stephen, I think a good place to start with our little discussion is to say that a bog standard buy-to-let product is not acceptable for an HMO. Could you explain why?
Sure. HMOs are a specialist type of property. They need a specialist valuer to assess them. There are additional planning and licensing requirements. There are additional operating factors, managing multi-tenants, different void profiles, different wear and tear on the asset. So it's a different proposition to a single dwelling buy-to-let, and therefore it tends to fall within sort of the realms of specialist lenders. And there is now a sort of a healthy market for lenders supporting that type of landlord on the back of an increasing move towards those type of assets by landlords who are attracted by effectively the income profile that the properties can provide. Typically you can get 7-8% yields versus kind of a 5% yield that you might get on a single dwelling. Mm-hmm. So clearly that's attractive to landlords from a cash flow point of view. And there are other, I think, macro factors affecting the market. Property prices, as we all know, have just become, a lot more expensive. Affordability tests to be a homeowner are very challenging now post MMR. Affordability for rents is under a lot of pressure. We've seen falling unemployment, but not much wage inflation. There's a stat from HomeLet that I saw: 55% of a tenant's income goes on rent if you live in London. So there's an affordability challenge. Most of the regions are more than 40% of their income of tenants goes on their rent. And I think in that context, people are kind of more open to a shift towards home share, house sharing, as a more affordable way to live in the areas that they wish to live in.
Indeed, and quite a few of the discussions we have on Property Tribes are about how HMOs are valued, because there's two kind of standards, isn't there? There's the bricks and mortar value, and there's the actual value that the income generates. Yeah. So how does Shawbrook value an HMO?
I completely sympathise with landlords on this point, and it's an area that's very, very kind of confusing and very dependent upon local market factors. So you can get an example where a landlord can buy a property, a standard single dwelling. Under permitted developments, you can turn it into a small HMO without planning permission. So you can buy a property for 100,000, spend 20, and you can create a HMO which might, on a capitalisation of its income, be worth 200. But if I was a landlord buying that property, why would I not buy the neighbouring property, spend 20,000, and therefore have, an asset that cost me 120, giving me the same income as the £200,000 asset? So in that environment, the valuer has to have regard to the scarcity of the HMO market, and some local authorities will have an Article 4 direction which will restrict the permitted developments and won't allow development from C3 to C4. In that scenario, a valuer would ordinarily capitalise the rental and look at it on that basis, but also try to have regard to what those properties are trading for, in the open market, because the value of a property is what a willing buyer and a willing seller will trade at. And that's the bottom line. Right. The difficulty with HMOs is that many landlords, many investors don't sell HMOs. They're great yielding assets, they're kind of cash cows, and therefore without a ready market of trading HMOs, what does a valuer look at in terms of what the market will bear? So it's a very specialist market, and it's dependent on local market factors, principally the demand for kind of amongst tenants for multi-let properties, and also what the local authority has done with regard to an Article 4 direction. Because an Article 4 direction can create scarcity value for a HMO, because it prohibits people changing a single dwelling property into a multi-let property. Without an Article 4, the argument holds that why would a landlord pay a premium for a HMO when they can buy a single dwelling, do the works themselves, and create their own HMO? So it is very much dependent upon what the local authority has done and the local market. The other thing a valuer has to have regard to is what is the property traded at in the local market, because value is what a buyer and a seller will transact at. The difficulty is many landlords do not sell HMOs because they're very profitable and they're very cash generative. So without a ready market of transactions, it's very hard for a valuer to sort of point to what the deals trade at. So they have to try and find a compromise between its bricks and mortar value as a single dwelling and potentially its investment value, the benefit of its yield, depending upon scarcity value and if there is any restrictions on creating that in the local market.
A lot more to it then, a lot more to it. And if we niche down even further, let's just finish by talking about student HMOs. Now, this is often touted as a great way to generate cash flow, but there's various different aspects of this. And what are your views on student HMOs?
Yeah, I think they have their place in the sort of student housing sort of product set. I mean, many students will have halls of residence available to them from the university. There's an increasing provision of purpose-built student accommodation aimed at postgrads, foreign students who want high-quality accommodation, good security, good mod cons. And then there is a community of students who like the house share with their friends, their own property. It can be more expensive for a student to do that than to go into one of the purpose-built properties. A lot of landlords will find if they're in poor locations, they will potentially be exposed if demand falls from students. Whereas if you're in a prime location, then you're a bit more protected against changing trends from the student community. So I think it's not a one-way bet, and you have to understand your local market, understand what students like and what their options are in the area and the provision for those students. You can do your due diligence on the university town. There's obviously a lot of public record available around the covenant of the university. There are certain towns where there are multiple universities, which give you some more confidence. So you need to do your homework. The other thing I would say is that HMOs historically have always been student-let, but increasingly we are seeing more professional tenants opting for HMOs due to affordability reasons, the fact that they can't rent in locations that are good for the work. So their only option really is to house share, and you're seeing a high-quality HMO product, with good quality broadband, telephone, TV, plasma telly, good quality fixtures and fittings, which is attractive to a professional tenant now. So there is a changing market for HMOs.
Indeed. Well, thank you very much for sharing those insights, Stephen. And let's just finish by reminding everybody that Shawbrook Bank products are available via Property Tribes Mortgages.